Are you ready for a new level of income? Let me introduce the moving average indicator, the tool that'll turn your trading into the art of accuracy and profits. Normally, I trade on Pocket Option, the finest and most reliable broker out there. However, by y'all's request today, I'm trading on Quotex. Let's go. Hey guys, this trading session is dedicated to one truly amazing indicator called moving average, and today we're trading on Quotex. I'm well aware some folks use this platform, so we're gonna try and trade here for once for the sake of variety. But if you're looking for a reliable, solid, and fast broker, the link to my trading platform is in the pinned comment below this video, just so that you know where we trade most of the time. So our today's mission is pretty simple. We're aiming to place a few trades using this wonderful indicator. You've probably already seen a bunch of videos on this indicator. Today, I'm gonna reveal a bit of an unusual way to read it, and we will overall get to know the indicator a little more, along with learning a convenient way to apply it in trading. So let's get rid of all this and enable it back. We need the moving average indicator, so we're heading to the indicators list and on whatever platform you're working with and looking for the MA indicator, which is short for moving average. We're clicking it once, setting the moving average periods. The first one gotta be 12, switching the color to blue, for instance, and adjusting the line to make it appear a bit bolder, something like this. The second indicator is the same good old MA with a period of 25 this time, however, a little bolder as well. And I guess we can leave the red color. So what is this moving average lines essentially? What kind of an indicator is this? And in and of itself, we've got the first indicator with its period set for 12. It's the blue line or the cyan one, whatever. It displays the average price value according to the last 12 candles. So we're taking any 12 candles as a basis, their opening and closing data, or some average value. So basically this line forms based on the last 12 candles data. Since it takes 12 candles into account, it's quite fast and dynamical and is therefore constantly changes based on the price fluctuations. But we've also got another moving average line with a period of 25, which means it covers the info of the last 25 candles and is therefore obviously more, heavy, passive, so to say, less mobile, which makes the two lines occasionally cross. If you're not familiar with the whole thing, let's quickly cover it. What do this intersection mean, essentially? First of all, when the fast line with a period of 12 crosses the slow one with the period of 25 upwards and kind of starts moving above the ladder, it's a signal of a trend change from downtrend into an uptrend. As soon as we receive this signal, we either place a trade right away or look for an appealing setup for such an upward motion. Same concept applies to signals to sell. We gotta try to skip these kinds of areas that display a bunch of tiny intersections. Those contain a lot of false signals. Since such pieces are sideways motions, there is no point to trade within a sideways motion or a so-called flat, at least in terms of this particular strategy. Signals to sell look pretty much identical, the same intersections. However, in that case, the blue line would be the one to fall below the red one. The fast line goes below the slow one, basically. And that's a signal that confirms a downtrend presence. Thereby, we trade downwards either right after the intersection or after looking for a nice and safe entry point. I think we've covered all the steps and cleared it up. Let's get to trading. I suppose we shall talk and review a few of the first deals in detail. Of course, we're going to be overall doing the general technical analysis in order to avoid any possible blunders. So we're facing an intersection. As I've already said, the blue line had been located above the red one for a while. The fast moving average line was above the slow one, but then at this point, at this moment, the price rapidly fell below both of the levels and fixated down there. So the whole situation is the blue line crosses the red one, which is a signal confirming the beginning of a downward motion. Well, it's already begun. It's just that this particular intersection additionally confirms the local trend shift. Basically, we witnessed an uptrend before, now we're waiting for a downtrend. I feel like everything's gotta be clear so far. At the moment, the candle rolls back a little bit, it's forming green, but it's okay. We're gonna go ahead and place another downward trade. Let's try it out. Basically, we're covering the previous last deal with this one. Although you may trade with this strategy as if it's a signal one. However, if you know the basics of technical analysis, is better. Sometimes it's better to wait for a better entry moment, but it's not forbidden to place the trade upwards right away after an intersection or downwards. Just be careful and keep in mind you might have to take multiple trades in a row for once in a while in order to cover a sudden loss caused by a lack of time for the market to continue its motion according to your plan. That's totally alright. Since we trade with a fixed expiration time, mine is currently set for 1 minute speaking of, you can feel free to trade with an expiration time of 2, 3, or even 4 minutes if you're entirely sure the trend will get confirmed. I hope it's clear. Just like in this case, we're getting $930 subtracting the $500 we lost with the first deal. We're left with $430 of net profit. Amazing. Now we can get back to the initial deal amount. If we analyze the chart, what can we notice overall? Obviously, the price reversed from the resistance level. Then there's also a support level the chart is heading towards, and here's another local level the price might come to. And here's another one, by the way, the level we're, by the way, currently at. Therefore, after this level is broken through, the price will keep on falling. So guys, let's place a trade downwards right here, genuinely hoping the market will indeed go down. Let me elaborate on what I mean by finding the best entry points after an intersection. I'm sure many might have questions regarding this one. I'm gonna try my best to explain in as much detail as possible what all of that means. Look, the market technically can react right away after an intersection, but it's not always the case. Your deal made after an intersection may not always close in profit right away. But at the same time, what options do we have? How can we increase the win rate of our deals? I mean, how can we actually increase the number of the successful ones? Extremely simple. Look, since our moving average lines are set for a pretty common period, such periods as 12 or 25, we can also add a moving average line with a period of 50 to that. Speaking of, this one would be a very bold and thick steady line. Of course, lots of traders work with these lines, so the lines can easily play roles of resistance or support depending on where the chart is located in regards of the lines. For instance, let's take an example and consider it on an example. Take a look at this piece right here. Imagine we didn't risk placing a trade right away. So when do we enter the market now? We've got two options. The first option, we're waiting for the price to touch the blue line. And option two, we're waiting for it to touch the red one. The chart can safely interact with the line. So we're waiting for some time. Basically, we understand the trend is rising. We wait for the right moment to click the up button. Then we wait for the chart to touch either of the lines. And only after the touch and the level of retest do we place a trade upwards. Or, like in this current case, we place the downward trade, a trade downwards, because the chart touched the red line. I've just noticed it and is now ready to resume the motion in the fallen direction. That's the whole thing. Obviously, I'm sharing it with y'all secretly, so make sure to apply this in practice. It's a useful tool that can get you money. So guys, let's place the last trade. Not the worst possible case out there. We can figure it out with no issues whatsoever. We can see there used to be a nice rise in motion with a good signal to buy. There was a signal to see later on just as well. which was followed by a little prolonged retracement that fell below our moving average lines that signals a sell. However, the market broke free and bucked up in the end of the day. We've got another fresh intersection. The price is currently testing the blue line, or plus. We can see this fascinating pattern. It's a candle pattern called a hammer, which is a candle with such a tiny body and a long downward shadow. This indicates a buyer force is present, so there's some interest in pushing the market towards the rising tendency. That's exactly why this fabulous green candle appeared right after the set pattern. So our deal is now decently closing in profit. Amazing. So guys, this was the last deal. We've made a nice sum today. I hope you learned lots of helpful things from this video, so don't forget to subscribe, and don't forget that I also have a free Telegram channel with free signals. You can also try and copy my deals, compare your strategy to mine, and perhaps draw some conclusions besides making money, of course. And yet, I'm not saying goodbye. See you in my next video.